All right, how's it going, guys? This is Sting here, and I just want to give a quick shout out to Spaceman BTC. Today, we're going to be going over his profile indicators, and over the next few weeks, we're going to be breaking down his indicator suite in general. He's going to be going over how to set them up, why they were made, what his kind of ideas and inspirations were behind them, and then I'm going to go through how I use them and what order flow techniques I've carried over from other markets and other tools and platforms into these indicators and this whole suite in general. Also want to give a quick shout out to Bybit for helping us out and sponsoring this video series and making this all possible. So yeah, let's go ahead and get into it. So basically I have two charts up. One on the left is a daily BTC chart with a monthly space time profile. And the right hand side is a hourly BTC chart with a weekly space time profile. So we're basically just going to start by talking about what is market profile, what is the space time profile, and how do they differ. So we're going to start with this daily chart right here. And I'm just going to go ahead and hide these candles. And so we can see we have these nice little distributions, right? So we have 1, 2, 3, and each one of these is kind of representing a month. So we can kind of see how, the distributions moved up and they moved down, and then they're kind of starting to move up back again. So the basis of market profile is basically combining time and volume into a distribution in order to tell where, support and resistance have built up, where time has spent, or where price has spent the most time, how much volume was transacted there, where we can then kind of derive areas of value, let's say, or fair value if we're looking at auction market theory. Sorry. And basically, what the basis of auction market theory is that we believe that every market is an auction, right? And that it will go lower until it finds the appropriate amount of buyers, and it'll go higher until it finds the appropriate amount of sellers. And the equilibrium point is considered fair value, where 70% of the volume is then transacted, and anything outside of that we consider, standard deviations from the mean or the norm. So when we look at a standard type of profile, and this would be a very good example right here. This is kind of the standard distribution that we look at. So we can kind of see that the value or fair value would be where these two blue lines are marked. So 70% of this volume profile, right? And I'm going to call this a volume profile for now, even though we specified as a space-time profile. So we can see that 70% of this monthly volume profile is kind of done right there. And then we have this orange line right here, which is called the point of control. Now, the point of control is the single most point of where the most volume was transacted during that time period, right? So if we were to combine all of these profiles right now, we might get a different point of control and a different value because it's over a different time period, right? So there is still an element of time in this as well as volume and, price action. So why do we use these? What is the main need for a profile, right? The way that I use them is threefold. The first thing I want to do is I want to look at context, right? And how do I look at context? So context is something that's very misconstrued. People think, range versus trending is context, which it is, but that's a very broad kind of overview, right? Because within price action, you can have micro ranges and micro trending moves and microstructure. So the first thing that we want to do is use volume and use where price has been building up in time to kind of give us that context. Okay, so if we were to look at this chart again and we were to flip this back on, yeah, we can say that price is kind of chopping in here and it's starting to bleed lower. But if we look at the context of this, value has just actually been built up here for 3 months, right? And while it's slowly shifting lower and we can see the price is kind of going lower, we might have gotten very bearish right here. But until this actually breaks this nice volume node right here, right, which it did briefly and then got back above, we can't actually say that value has been migrating lower. Value has actually just been building in a range this whole time. Versus if you were to just look at the candlesticks, and let's go ahead and take this off, you might say that this is the range in here and that we're breaking lower from it here because you had a nice little retest, right? But if we're looking at the volume, we can tell that the range is actually from that edge of the volume down to here, right? So while we still do get a little bit of a fake breakdown here and we get a couple wicks below, it's not as clear that it was a range breakdown as it would have been if you were just looking at price action, right? So that's one reason. If we go ahead and put this profile back on, we can kind of see, and this is a trick that I got from Abe Trade, and I really like this, and shout out to him for that. Is I saw him a couple years ago when he was doing his profiles, he would put this volume profile on the right-hand side, and it would kind of just make it easier because when we go over Composites, which is a combination of multiple volume profiles of value overlapping, we can kind of see the same things that we're seeing now with the volume profile. But if you put the volume profile on the right-hand side, you can kind of see where the general builds of the volume are without actually having to merge the profiles themselves, which is a handy little tool that you can do right in here when you go enable composite. All right, so we've talked about value areas and point of control. Now let's talk about what a naked level is. And then we'll go ahead and talk about the rest of the reasons of why we use a market profile. So a naked level is basically a level that has not been traded at or traded through previously when a profile is forming. So if we were looking here, right, when we look at this price action, our levels of importance are going to be this low, which is going to be our previous week's value area low. Let's make that a little bit bigger. Right? And then our point of control. So as price trades through it, we can see, the new month opens here. We kind of trade below, we reject that value area high. We come down and we trade back into the POC. Trades down here, dips below it a little bit, and then rallies above the value area high, right? So at this point, all of these levels are now being traded at because we get back below the value area high and we come back and touch the value area low. So when we move on to the next month, right, when the new monthly candle opens next month, these levels are no longer naked because this profile has touched all of these levels and the ones below it, right? Now, if we are to look right here, right, we have the same thing here. This is the area of importance. It was traded through right here. We have this area of importance. It was traded through right here. We have this area of importance. It was traded through right here. So none of these profiles that we've shown right now have naked levels, right? Now, if we go to this month's profile and we watch how this price action played out, right, we can see that we have a level right here, right? Previous month's volume profile, value area high, value area low, and this is the point of control, right? So we took all of these levels off because they had been washed, they had been traded, and we don't have a composite level that is formed here. So now these levels they're still important reference points and they can still act as support and resistance, but they're less important than now the fresh monthly value area, okay? Now we can see that the monthly opened here, we reacted nicely off the value area low, kind of rejected off the POC, came back down, value area low, and then kind of came up here. We went above the POC and then failed and came right back below. Now at this point, when we're looking at this monthly profile, we can see that after it broke down from this value area, after it broke down from this distribution in here, it did not return back to this area, right? It broke down pretty violently and it moved pretty fast. And that is also what can be seen by this anomaly right in here, which we'll talk about later. And so basically, when we look at this profile right now, we can see that this level has been traded at, the point of control has been traded at, but the value area high hasn't been traded at yet, right? So when the new monthly candle opens, we're going to go ahead and adjust our profiles right now, right, when price starts trading, but we're going to use this as a reference point, the value area high, and we're going to use the value area low as another reference point. But the reason I'm not going to take this level off is because it's a naked level. It was never traded at on the previous month's profile. So now that we have a naked level, this can act as a very important price point or a very inflection point at a later date because we know that this was either the edge of value or a naked point of control where there was a lot of buyers or sellers transacting at the edge of value or at that point who might want to step in again to defend that position if price ever does come back up to that point. So that is the definition of a naked level. Now, if we just keep going through these examples, we can kind of see when levels get washed. So we have this value area low, we have this value area high, we have the point of control, and now we have this naked value area high up here, right? So let's go ahead and go through it. We can see price trades down again, kind of reacts off this value area low, deviates the value area low again. And so we can see it's kind of washing this level, but these two levels up here are still intact, okay? So as the new monthly opens, we're going to go ahead and do the same thing. And this is a very, very basic value area breakout strategy that you can play every time a new value opens. And obviously there's lower time frame techniques that you want to be using to secure these entry, take profits, and stop losses. But this is the kind of basis of, okay, what is the context and where do I want to interact, right? So those are the first two reasons of why I use a market profile: context and levels to interact at, right? So we've kind of talked about the context in terms of value kind of shifting and how it broke down from value and how it leaves those naked levels. The levels to interact at are previous week's value areas I like to play at. I like to play at naked point of controls, naked value areas, and then also composites. So like we talked about when we have multiple areas of value overlapping, right? And that's usually composites are the only time I will leave levels on my chart after they get washed. Because if we have a nice area of value forming, which is what we believe a composite is, that is essentially a nice range or a nice base, right? So When I'm talking about a market profile, I kind of essentially look at the market as being in two ways, either in balance or out of balance. And then you have micro trends and micro structures within that that can kind of give you hints of, we're going to return to balance or we're kind of fading off from an aggressive move and all of that. And that does come with a lot of order flow and time and kind of seeing those things play out very often and, in different market conditions. So if we continue on with the same exercise that we're doing, we can kind of see how price has traded through this value as well. It's kind of washed all these levels on the way up, and we have this little wick on Binance that kind of took out some of this, move down. But this isn't a very thin move down because we can see that there's wicks on both sides. We can see that it is traded all the way through. It's not a very thin, fast move like it is here, where it's just one bar in one direction, where we can see this leaves some single prints or anomalies here. And that is the third thing that we're going to talk about today, anomalies, and the third reason I use market profile. So the main two anomaly types that I look at are single prints, right? Liquidity voids, single prints, or poor highs and lows. When you see we don't have a little pink tail up in here, and we'll talk about tails as well, tails and excess, but when we have the absence of a tail or the absence of a long wick on the end of a candle, that is what we refer to as a poor high or low. Now, when you look at a daily candle and you look at, the candle structure, if you can go back and you can see how many individual candles don't have upper or lower wicks, right? It doesn't happen very often. And when it does happen, the absence of a wick is usually a place where price will come back and revisit and kind of sweep that area to create excess. Now, what is excess? Excess is essentially the tail or the wick of the candle. Now, when we see excess at an area, we consider that good. So while it is shaded pink here, and I know the singles are shaded pink here as well, that might kind of confuse people as an anomaly, we actually want to see the excess on the edge of candles. And if it's not there, like it is here, where we have, two clear highs, where it's, the daily high right here, and the second daily high is within a small margin of percent, we can consider that as equal highs, clean highs, other people may call them. But that is essentially the anomaly that we are looking for poor highs and lows when we look for price to revisit those areas. So as we go back and kind of go through this thing, so we can see here, this level is washed, but we can see how perfect this retest is here, right? Now, this is a very hindsight cherry-picked example. I think, oh yeah, this is the value right here. It traded through it here. I'm still having it on my chart, right? This is not something I would leave on my chart because it was washed here, but it just so happens that conveniently this value area high also lines up with that level. So we got kind of lucky in that sense, but I would not keep that level on my chart back here once it's traded through here saying, oh yeah, this is a perfect retest, because that's not how I use it. And that's how I kind of keep this in, while it is a very discretionary system, and you kind of have to see how value overlaps and decide what levels you want to keep and kind of take. That is one of my general rules of thumb, is if, price is traded through a level and we aren't forming a good value composite base there, then there's no reason to leave that level there. Now, on the contrary, we can kind of see that it did actually form a good composite. We have this nice volume node. The value is here. It built up right over that, right? So we can kind of make arguments for both sides of why you would or wouldn't leave that on your chart. For me personally, this was a big range that I was looking at. So while I may not have had this exact level, I was looking at this general area as a base. And then we kind of look for value expansion from there. So we kind of look for the breakout, and we can kind of see now we've had overlapping value on every single one of these moves. And for the first time now, we have the market open and value is placed outside of previous week's value, or previous month's value, sorry. Now, this was a big tip off to me, because what that generally means on a daily basis and on a weekly basis, and now we're looking at it on a monthly basis, is when you have value that opens outside of the previous week's value, the previous day's value, the previous month's value, you're looking for volatility or an increase in volume or kind of reactions, because essentially what you're saying is that where value has been building for the past day, week, month, whatever, is now moving outside of that. And when we look at that from a very price action point of view, when we look at that in the order flow, what we see is we see a lot of stop losses building up on both sides of the range, which is the same thing that can be internalized here when you kind of think about the same things. When price is breaking out of value, when price is breaking out of the range, and we've been trading in a range for such a long time, you have to think about how many stop losses are then put above the highs and lows and how much leverage was then built up in that range. And that's why a lot of people, when we form a small range and it breaks out, everyone's looking for this big move, when it's like not really, because those big ranges, those big consolidations, those big bases that are formed are creating the leverage and the stop losses on both sides of the market that the market can then use as fuel to then kind of trigger the run, which eventually leads into a bigger run, right? So this is what we were talking about here, was while this kind of started as a short squeeze in here, it actually led to spot buying. So this big wick we can see on Binance. We know this wasn't there on all the other exchanges. It was a cause of liquidations and a failure with the trading engine. But while this started as a short squeeze, if we go back and we look at the cumulative volume delta, we go back and look at the exchange flows, right? This was all spot buying as well as short liquidation. So while a lot of people are saying this is derivatives led, blah, 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 right? If you actually looked at the data, we could see that this was spot buying as well. And it may have started with a short squeeze, but ultimately that can fuel and lead into something else when you get enough fuel off the first push, right? So now that we kind of look at this, we can see how naked levels come into play. This naked point of control that we had left from here from the month of May has now just been tapped in here, right? We can see that reaction and we can see the rejection that it had off of that. Now, generally, naked levels are not something I want to be taking fresh positions at, but more so targets for. And now we're just going to kind of talk about a brief trade that I took around that. And I actually took the ETH trade over the Bitcoin trade. I have more size on my ETH position, but the Bitcoin one played out a bit better. So we'll go ahead and just break that down and talk about why you could have taken that trade or why you would be looking to not take that trade because of the naked level, because that's also a very valid reason if maybe you shouldn't have taken that trade because we did just react off that naked level, right? So there's two sides of this. This isn't the perfect setup, but this is a really good example of why discretion is important and how we can look at these kind of things. So the first thing that kind of tipped me off is talking about composites, right? So we can see that we have three major nodes in this volume profile in here, right? We have a very big node in here. We have a medium, decent sized node in here, and we have a little bit of a smaller node in here. Now, if we were to combine this would be the biggest composite, right? And we can just kind of tell based on the previous volume that was done here, the previous volume that was done in here, and the time spent, right? We have 1.5, 2.5, 3.5 months spent in this area, versus we have 1, 2, maybe 2.5 here, and like 1 or 2 up here, right? So just based on time, you can kind of see, and this volume profile just makes it very, very clear. Now, what we're going to do is we're actually going to combine the upper volume profile because this is the composite that we're in right now. So this kind of gives me a nice little rule of thumb of where I think value should be, and then we will fine tune it with actually doing the composites, right? So that's just a very general rule of thumb, okay? Based on the edge of this node and the edge of this node, this is where I think value is going to be. But what we're actually going to do is I'm going to show you how I would kind of actually do the composite. So this is February 26th. Right, so I'm going to do February 28th because this is supposed to be a monthly composite, right? And then we will go to April 30th. I'm sorry. Okay, and we'll go ahead and enable a composite. All right, and so we can kind of see that this is a much bigger composite than I drew out, right? So we can see that if we were to take this value from here to here, right? That is the value area of this composite. And we can actually see that where the value lines up is actually really, really good support and resistance, right? Because, resistance here, support here, deviated here, found resistance here. So it's funny how well the volume actually lines up with what is good SR, even on the top end. You see a deviation here, kind of resistance here, deviated here, almost resistance here, right? And this was kind of the reason that I was looking at, like, okay, if we look at this daily chart, and we look at how it's broken within value, right? It kind of deviated here and rejected hard. It broke within and didn't waste any time. It went straight up to POC. And now what I'm thinking is it going to leave this other naked level here with this poor highs right into the edge of this value, right? So that was what kind of got me thinking. I was like, okay, well, even though it is rejecting off naked POC here, we could still have another push higher because, like I said, the spot flow is still there. There is still a strong bid. The moves up just aren't on only liquidations. There are liquidations, but there is a strong spot bid as well. So now let's look at a little bit lower time frame, right? Like, how can we actually execute off this? What does this mean now? So the actual level was at 57,300. So let's go ahead and put that on our charts, right? Let's just go ahead and put a rough naked POC at 53. I'll do that POC. Oh, add an extra 4. Okay, so that's the naked level. Now, if we're looking at, and this is the hourly chart with the weekly profile, we can go ahead and zoom in on this now. Now we know this is the naked POC level that we're looking at. we can look at, again, the volume of where this is built up. Now, this is a trending week profile, which we can cover at another point, but the basis of this is like, I don't want to be taking the value of it because this is not a true 70% value, right? If we're looking at this distribution, we can tell where the distribution is. It's right here. And we can also tell with price action as well as the volume profile on this side, right? So we have kind of three factors over here. Yeah, this is a trending day. Yeah, value is down here, and this does look like a good level. So we'll kind of keep that in mind. But that's not the be all end all of volume profile, right? And this is where the discretion comes into mind, is even though this is technically the level, this is still the more important area, this zone right in here, this little distribution, right? And again, you can kind of fine tune it by actually playing where the actual volume is, right? So tap, 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 breaks out, retest, hits the naked point of control and rejects. Now, why would I be looking for a long after it rejects the naked point of control, right? Well, value migration, right? First of all, we have value moving higher, right? So we can see that it's actually spent a lot of time in price. It wasn't just a quick move up and rejection. We then have a quick move down, which will look like a long liquidation into the weekly open, and then a reaction, right? Now, this is where it kind of gets sketchy, and this is where I wasn't sure, but I had taken this long on this down move right in here. And again, like I said, I was longer on the ETH, which is still sitting at my entry, so, not the best trade. But this is why this is a good trade as well, or it could be a possible trade example as well. And basically we were talking about, targeting that 5,900 area or that 60,000 area, which is that naked level and the edge of value composite, right? So what we'd be looking for is a retest into POC. And let's say we longed this initial reaction up there. So you didn't catch the micro bottom, you didn't catch any of this, right? You longed the top after the initial reaction and you put your stop loss right below the range low, right below the value low, and you're now trading back up into POC. Now, we could very well see this stall out again here and fail to break above naked POC, and this trade, comes and gets stopped out. But the reason I think this is a perfectly valid trade example, if you were to take this, is because we are breaking out of value right here, or this node right here, with value migration. We may have rejected the POC, but there is still clear upside objectives if we look at the bigger picture, right? And this is where two timeframes can kind of help you. Don't get confused on what timeframe you're taking the trade on, but we still have clear objectives on the higher timeframe that haven't been met, right? So we'll go ahead and see how this plays out, but I hope this kind of gave you a basic intro to what space-time profile is, what market profile is, and how I use it in my trading. Have a good weekend, guys.